Welcome to Business Loan Options Related to COVID-19. This is Crisis Practitioner Support Webinar number 2, presented by Justin Purcell and Susan Webster.
Something that's given me comfort looking through this document, these notes, Justin, is, and thankfully Deirdre's here as well, in respect of the microfinance loan, that you have essentially, it appears, and Deirdre will hopefully clarify this, that you might have a grace period of 6 months, during which time there's no interest payments and there's no repayments that need to be made. And also there is no penalty for early repayment. So for example, you could have the funds there in case you need to access them, but if you don't use them, you could pay it back, and there would be no interest penalty, and all you would have really lost is the time taken to apply for the loan, which is probably a good thing because you know the finances of your business.
Okay, Susan, that
brings us to the start of your notes now.
Okay, I think we're on a more stable platform now, and I think people can hear us a little bit better, but it seems to be going in and out. I think it's an internet issue, but let's just try and move through some of the slides. Susan, thanks for holding the fort there, and welcome to Deirdre Parkinson from Microfinance, who hopefully will be able to talk with us later around the microfinance options. So today we're going to look at business options, loans options related to COVID-19. I think, Susan, you've talked a little bit through why we might be looking at loan options, really to sort of prepare ourselves for the future. It may be not something that we need right now, but better look for a loan or have some sort of financial backup plan for the future if something were to happen. So that's why we're going to talk through these issues. It may be that you don't need it right now, but in the future, it's really good to kind of get your head around what's available. And we've tried to do a little bit of research into what are the most suitable products out there at the moment. So that's what we're going to bring you through. The two most pertinent funds available that we think you could apply for. So we're going to talk about SPCI and particularly the SME Credit Guarantee Scheme. I think, Susan, you talked earlier, why not the COVID-19 loan scheme? Because that seems the most appropriate. But that is a working capital scheme, particularly related to companies that have taken on investment or are developing, have a high level of research and development investment in their business. So you need to be able to demonstrate some level of innovation in your program. So we're going to specifically talk about the SME Credit Guarantees Scheme and talk through like how might you apply the nitty-gritties of it, and how does the actual scheme work itself. So
and can I just jump in, Justin, and say that I had a look at this website when I saw your notes, and it's actually very easy to navigate. And it is just click and it goes in and it tells you, it brings you to the forums, tells you what documents might be needed, etc. So it's very easy to navigate. It's a good website to try and get onto and use if you need to.
So we're actually just to preempt it also, we're going to make these slides available also just at the end of the session, and they all have links to all of what we're going to talk about here, such as the credit guarantees scheme, how to apply for the scheme, where do you find all the relevant information. So you should find that useful. So just to talk, just a brief overview of the scheme. It's operated on behalf of the Department of Business, Enterprise and Innovation by the Strategic Banking Corporation of Ireland. So they kind of oversee and implement it, and it aims to assist viable SMEs accessing credit. And the scheme can be used by businesses to obtain loans to support changes they may need to make to their business in response to COVID-19. And I think, Susan, you made a very interesting kind of, like, how do you demonstrate that you're having a COVID-19 issue in your business without making your application sound like your business isn't viable?
And that's the thing, because your business has to be viable. But I thought that was interesting that you obtained the loan to support changes you need to make to your business in response to this pandemic. And I was wondering, would that be, for example, technology? Because we are all using these webinar jam and Zoom and things like that. So could we use it for that type of technology, and could we use it for training in the technology to help us and assist us in that regard? So I think we could. I think so.
Yeah, I think so. I think things that will improve your efficiencies, potentially improve or reduce your costs, and be able to allow you to offer a better product offering to your clients. So yes is the answer. So just to complete the sort of operation of the scheme, it's 80% guaranteed by the state to the participating banks. The participating banks are AIB, Bank of Ireland, and Ulster Bank. They're the three. We have links to them later on, and we've links to the processes that there's an overall process, like a loan application, but each of them have slightly different application processes as to whether you need a business plan, whether you need a credit check, et cetera, et cetera. So we'll talk about that a little bit later. And then just in the star there is to qualify, you need to be a viable micro, small or medium-sized enterprise. So I haven't seen any, other than the larger solicitor firms, may run into some issues there. So moving speedily on. So the key features of the scheme. So there are facilities available from €10,000 up to 1 million with terms of up to 7 years. There is a premium payment made by the customer which has to be agreed in advance. It's 0.5% currently. We talk about that in a second, but it has to be signed up for, and that's paid straight to the state prior to the loan being drawn down. The provision of the scheme does not remove any liability from the credit for the customer to repay the loan. So that's a really important point, that the banks are being guaranteed up to 80%, but not if you default the person who's taking out the loan.
I came into the board meeting yesterday. I was at a board meeting on. I thought, well, I'll use it here.
Normal lending criteria, terms and conditions apply. SMEs must be involved in a commercial activity or a sole trader, etc. So they're fairly straightforward terms.
No, that's fine. What time was your meeting? No, it's fine.
So the scheme allows for a maximum of a 2% annual premium to the government, and that has now changed to 0.5%. And as I was saying earlier, a signed direct debit mandate is required at the time for the guarantee. The lender is ultimately responsible for the credit decision. So the lender decides, AIB, Ulster Bank, or Bank of Ireland, and the SME has the right of, if you want to apply to the lender, if you apply and you don't receive an application, you can use the lender's internal appeals mechanism. If the original decline decision is upheld, referring the decision to the credit review.
Here at all. It was just, I came to the board meeting yesterday.
I think we're getting feedback there.
Thank you.
I'm going to. I think Justin, if you want to ring, or perhaps
Keith, we can hear you on the call.
There's background noise from him. Thank you, Justin.
Okay, so.
Thank you. That's great. I know, Keith. I think, and I was just going to say to you there. So that means that just because I didn't understand this at all until I read it a couple of times and spoke to you. So that means that the person who's applying for the loan is paying a premium to the government, and the government are guaranteeing the loan to the bank.
Yes.
So we're paying for the government to guarantee it to the bank.
That's it. Yeah. Well, I mean, it's hard to see how the 0.5%. Would cover the full guarantee of the loan. I think it's more a procedural type thing, and maybe I don't quite understand why, but 0.5% of 10,000 would cover the full. So it must be just a processing fee, or just to cover, or maybe to guarantee that you're serious about it, or I don't know why, but even if it was 2%, it still wouldn't cover the full cost of the loan.
Okay.
So just moving on, I moved quite quickly through the credit review scheme there. There's two appeals. One is directly to the lender if you don't get the monies, or then to the credit review office. So it's a fairly straightforward process. So let's just move on to the actual applications itself. So the scheme is available through these three different lenders: AIB, Bank of Ireland, and Ulster Bank, and then there's a very good sort of SBCI, frequently asked questions. So at the end of the slides, when we upload them, you'll see that there are the application processes for each of the banks.
Mm-hmm.
Okay, so now we're going to try and have a chat with. Sorry, Susan, do you have anything to add there?
No, just I think to bear in mind that, as I said, the website is very easy to navigate. You will need to have business plans and other documents depending on which institute you're applying to ultimately, and that you have to show that you've been negatively impacted by COVID-19 by 15%. So other than that, I think I'd like, if I was going to apply, I'd like more information about that 2% and guarantee and paid by direct debit in the first instance. But as you say, if it's 2% of, for example, 10,000, it's not a huge amount. It's just, thinking about it, the exact workings of it. And presumably, if somebody is looking for that, they will get all the information that they need from either yourself or Keith, or by going to the website or the institutes themselves.
Very good. So, Deirdre, if you're able to hear us now, do you want to start commencing talking about your slides with relation to microfinance, which we're specifically concentrating on the COVID-19 business loans? So,
Good afternoon, everybody. Sorry, I couldn't hear the first part, but hopefully, look, I'll give you a quick run through of the Microfinance Ireland loan package in terms of, I know you've got a quick overview of it last week on last week's webinar, but just to give you a bit more detail in terms of the application process, what's involved and that kind of thing. So just by way of introduction, MFI was set up as a jobs initiative by the government under the Action Plan for Jobs back in 2012 to help small businesses who were really struggling to get access to finance. And we've been, carried on with that objective all along, lending up to 25,000 up until early March. The government upped the loan threshold specifically for COVID-19 up to 50,000. So there is loans available up to 50,000 for businesses that have been impacted by COVID-19. And when we launched this back in mid-March, the 13th of March, and at that stage, businesses were still open. We hadn't been in full lockdown. So the criteria remains that your business must be impacted by 15% or more of turnover. But look, the majority of businesses are impacted in that way now. I also should just confirm that our fund is available for micro enterprises. So by that we mean fewer than 10 employees and up to 2 million annual turnover. We mentioned here the local enterprise offices, and I know Susan mentioned it at last week's webinar. The local enterprise offices are one of our key referral partners, and they would work with you to help you in preparing your application. And there's some discounts on the rate, which I'll talk through in a second. So in terms of the loan itself, as I said, it's up to 50,000. It's for any business. It doesn't matter whether you're a sole trader, partnership, limited company. If you've been impacted negatively by 15% or more, it's typically for working capital to tide you over the current challenges, with loan terms up to 3 years. Because it's cash flow lending and it's primarily for working capital, it's 3 years, but we will look at longer periods depending on the loan purpose. The big thing here is, though, which is different to our standard loans, is for the first 6 months, it's 0% interest and 0% repayments. So in effect, that means that if you are drawing down a loan on the 1st of June, just for argument's sake, you actually won't accrue any interest or make any repayments until December. So it gives you that cushion, and hopefully, life will have returned somewhat to normal at that stage, that your business has been restarted well at that stage. And so the loan then would be repaid over the remaining term of the loan, which on a 3-year loan, it will be 30 months versus 36. But that first 6 months cushion is a really important element to help people in the current circumstances. As I said, for Leo, if you apply through your local enterprise office or indeed are referred by your bank, the reduced rate is 4.5% APR. And if you apply directly to MFI, it's 5.5. That is a fixed rate over the period of the period of the loan. There are no other fees or charges, or indeed no penalty for early repayment. And as I said, it doesn't matter how your business is set up, whether you're a sole trader, partnership, limited company, As long as you're a micro enterprise, you're eligible to apply. But the key thing, I suppose, the difference between us and other, say, commercial lenders as a not-for-profit, we're there to help people who can't get access to finance elsewhere. And we always say, you know, if you can get bank finance, that is probably your best route. We're there to help those that can't. Now, there are a lot of businesses and a lot of circumstances where, and I'm an ex-banker, so I understand, I suppose, how they work and operate in the last couple of years in particular. You know, they've a very low risk appetite, and that will continue on. And even in the media over the last week or so, you can hear that semblance that, you know, they have a very low risk appetite, and therefore there are a lot of businesses who can't avail of bank finance. So that's where we step in. But I suppose your first consideration should be, can the bank help me here? And they'll be with you for the long haul. Otherwise, you know, we'll get you over the current challenge. But we're kind of a one-trick pony in that we'll provide you with the loan for the short to medium term. But that's all that we can do. So in terms of the feature or other pieces around eligibility, in terms of, for sole traders and partnerships, we will conduct a credit search centrally with the Central Credit Register. And we will also do a search in the limited company, the name of the limited company where that is the borrower, that the borrowing is going to be in the name of a limited company. However, we're unable to obtain credit reports for directors and shareholders of limited companies. So as part of the application process for limited companies only, we ask executive directors and anyone with the 25% or more shareholding in the company to provide us with their personal credit reports. And just to explain why that is so, for limited companies, so we, under our legislation, under the Micro Enterprise Loan Fund Act of 2012 and statutory instruments in 2012 and 15, we lend to individuals primarily. And in order for individuals to be liable for a loan with MFI, we take a letter of indemnity. It's not a personal guarantee, it's a letter of indemnity that makes the directors and shareholders of a company liable for the loan as would a sole trader or a partnership. So that, just to explain that, I suppose, subtlety. We look for bank statements, both personal and business. If you have business statements, not everyone does, but personal and business. And if for loans over 25k, we also look for aged debtors and creditors. So that in terms of the paperwork, and I suppose to say here, you know, the paperwork that you prepare for a loan with MFI is no different to if you're applying for the banks. I've seen, you know, the credit guarantee scheme and that kind of thing. It's all the same. People want to see a business plan, and it doesn't have to be a very long. We have a very simple template with about 6 questions: who you are, what you do, what's your business, and how you've been impacted by COVID-19, just to understand a bit of background in terms of your business. There's an application form and the cash flow forecast, and we look for a 12-month monthly cash flow forecast, which is, and a lot of people who are applying to us at the moment are struggling with this because they're saying, well, when will I reopen, and when is my business going to be back on track? And nobody knows that question. So it's your best guesstimate, taking, I suppose, a cautious approach in terms of revenue over the next number of months. But I suppose as part of the assessment process, you will have a discussion with one of our loan assessors I'll tell you now how the application process works, but which will tease through, what was the rationale for your cash flow forecast, where did the figures come, what are your fixed overheads, that kind of thing. But those, a business plan and a cash flow forecast is really important in, projecting forward, telling us about your business, first of all, but also projecting forward how you see the business will recover over the next year or so. I know there's been, about questions about, well, what do we mean by viable? So we're there to support, I suppose, businesses that were viable before this happened in March. So if you can demonstrate in whatever way, whether it's management accounts or financial accounts or whatever you have, to, show us or demonstrate that the business was viable before this happened, and it will be viable again once life returns to normal. That's all we want to see, and we're there then to, I suppose, fund the gap between the two. So I think, the application process, just to go through that very quickly. So the easiest way, I suppose, if you wanted to progress an application, is register your details on Microfinance Ireland's website. And we will send you out the relevant application pack for your business. So whether you're a sole trader or a partnership, you'll get one set of documents. Whether you're a limited company, you'll get a slightly different one. And you will also have, I suppose, a point of contact. It could be me or one of my colleagues, that if you have any queries about the application forms or any questions you have about the process, you can get in touch with us by email. And then sorry, Keith.
Sorry, Deirdre, we're just running to the end of the call. So,
no worries.
Is there? There's a couple of queries on the left-hand side that we're just going to ask some questions. So there was a question around the cash flow forecast and putting in personal income. What do you mean by that, and how should that be handled?
Sorry, I didn't catch the question.
Can you hear me? Yeah. So there's a line in the cash flow forecast template requiring income coming into the household.
Oh yeah, household income. Yeah. So what we look at, I suppose, is we take every when we're looking at a proposal, we're looking at everything that comes into the household, not just related to the business, to I suppose, give people the best chance in terms of repayment capacity. So if there is additional, a spouse and they have income, that can be taken into account in terms of looking at the proposal.
So you're really looking at the repayability of the household and how
exactly.
So it's a friendly condition.
Absolutely. Try and give people the best chance.
Okay. Listen, Deirdre, thanks a million. I wish we had more time. I wish we had better technology connection. But thanks a lot. So how best can people, should they just go through the website to apply, or is there someone?
They can register their details, and I can certainly circulate my email address. You can pass on my email address if people have individual queries. I'd be happy to help. Okay,
very good. There's a query coming in there. Can you choose to let the business stand alone? I'm not quite sure what that means in terms of repayment capacity. Can you strip out the household from the personal? I think, the household from the business, or do you want to see the whole income in its entirety?
Yeah. So we back the promoter.
Yeah. Okay, and I guess these are all on an individual case-by-case basis. If you're out there and you think you should apply or thinking about it, contact Microfinance Direct. I know there was a query there also from Connor around what type of sorry, what was the query again?
Well done, Justin. I didn't see that.
Yeah, there was a query around would the bank seek to take some sort of
Security. Was that the
Security,
one?
yeah, security,
yeah. Sorry.
And I guess that again comes back. Yes, possibly normal rules and conditions, lending criteria apply. So it'll depend on each on a case by case basis, the amount that you're taking on, and what it's for, and how risky they perceive it. So yes, Susan, in wrapping this up, do you want to make some concluding remarks?
Just in respect of Microfinance Ireland, it was interesting to hear from Deirdre there. I didn't quite realise that essentially they're a lender of last resort, because we had discussed that previously, how I know one of their terms and conditions is that you need to be able to show that you can't access finance from a commercial lender. And so, as Deirdre was saying there, you go to the banks first. So I presume that the banks would say, well, no, we're not letting, they give you a letter, and then you bring that to microfinance. But I'm presuming as well you have to show that to microfinance that you're a viable business. I'm not quite sure how you square that. I mean, so I just wonder about that. But what I do think is interesting is what Deirdre said when I said from the outset that the first 6 months are interest free and there's no penalty for early repayment. So if you wanted to be cautious and to get that finance in place and have it ready in case there was difficulty down the line, and then if there wasn't a difficulty, please God, then you could repay it back and there's no penalty, there's no difficulty that you haven't been charged any interest. So I think that's very helpful for practitioners. And then there were a couple of things that were in the slides about aged debtors and creditors, which to be frank, I didn't understand, and we discussed this as well. I didn't know what they meant, and you were very helpful. But I think, again, if people have specific queries and want to know about that, then they can contact Deirdre or Microfinance Ireland, and I'm sure that will all be explained. Just to reiterate and remind people, I know you're going to say this, but just if you go through Leo, that there is the preferential interest rate, I think 4.5 rather than 5.5. And again, Leo or the local enterprise office can help with business plans. So just to promote them again. And then, of course, Justin, yourself and Keith in the Law Society, and people can contact you in absolute confidence, which I think is very important for people to know.
Okay, everyone. I know it's been a bit of a roller coaster ride in technology again, but at least we got to the conclusion of a live one. I know, talking about aged debtors and creditors, I feel like I've aged slightly with the technology. But onwards and upwards, we'll get there. Perseverance and resilience is the name of the game. So, listen, thanks everybody. Thanks, Susan.
Thanks, Deirdre. Thanks all the attendees. Thank